What's up, Fighting Bulls? Today we're breaking down AN, and this is one of the cleaner charts we've had on the watch list, because we're not looking at a stock that's simply ripping straight up. Instead, we're looking at a stock that already made a significant move. Pulled back, and is now attempting to build a base. Any move from approximately $2.20 all the way to about $2.85 before pulling back toward the $2.53 area. Now we're seeing the stock consolidate around $2.55 to $2.65. And that's what makes this chart interesting. The question isn't simply, can ANW go higher? The real question is, can buyers defend the $2.53 to $2.60 area and eventually push the stock through $2.65 and then $2.85? That's what we're going to break down. As always, this is entertainment and educational market analysis only. It is not financial advice or a recommendation to buy or sell. Let's start with the overall structure. NE had a strong momentum move from approximately $2.20 to $2.85. That's roughly a 65-cent move. That's significant for a stock trading around this price. But after reaching approximately $2.84 to $2.85, sellers stepped in. The stock pulled back toward approximately $2.53. Now here's what I like about the chart. NE didn't completely give back the entire move. Instead, buyers stepped in around $2.53 and the stock started moving sideways. We're now seeing consolidation around $2.54 to $2.65. This is important because after a large momentum move, a stock doesn't necessarily need to immediately continue higher. Sometimes the healthier setup is run, pullback, consolidation, continuation, and that's the structure we're watching here. I describe the current pattern as bullish consolidation. We're seeing a constructive sequence of higher high, pullback, higher low, consolidation. The major rally established a high around $2.85. Then we saw support around approximately $2.53, and now the stock is attempting to hold above that level while trading around the $2.60 area. This is different from a stock that's continuously making lower highs and lower lows. The structure here is much more constructive. We have $2.20, $2.40, $2.53 on the support side, and on the upside, $2.40, $2.55, $2.70, $2.85 on the broader price structure. So the intermediate trend is bullish. However, there's an important distinction. This is a 5-minute chart, so we can call the short-term structure bullish, but we cannot use this chart alone to declare a long-term trend. For that, we'd want to examine the daily chart. Now, let's identify the levels that matter, starting with resistance. The immediate resistance zone is $2.62 to $2.65. This is where the stock is currently consolidating. If ANY can push through $2.65 with increasing volume, that's our first meaningful breakout signal. Above that, we're watching $2.68 to $2.70. That's the first major target. Then $2.75. And after that, $2.84 to $2.85. That's the major swing high. If ANY breaks $2.85 with strong volume, that's where things could become much more interesting. A clean break could open the door toward $3.00. So our upside roadmap is essentially $2.65, $2.70, $2.75, $2.85, $3.00. Now let's look underneath the stock. The most important recent support is approximately $2.53 to $2.55. Then we have VWAP around $2.57. The 20-period moving average is around $2.59, and the 50-period moving average is around $2.61. The 200-period moving average is significantly lower, around $2.28, and that's an important observation. Current price is around $2.61, which means we're above VWAP and well above the 200-period moving average. That tells us the price structure has improved considerably. The stock isn't sitting underneath all of its major averages. Instead, price is pushed above the baseline. That's constructive. But we still need buyers to defend the $2.53 to $2.60 region. Now, let's turn this into our hypothetical $500 Fighting Bulls trading plan. One of the rules we're using here is that we don't want to risk more than 10 cents per share. Our preferred model entry is $2.60. At $2.60, $500 would allow us to purchase 192 shares. 192 shares at $2.60 costs approximately $499.20. That leaves us approximately 80 cents in cash. Now, let's define the risk. Our stop would be $2.50. Why $2.50? Because it's just below the important $2.53 support area. Our risk is 10 cents per share. Max loss is $19.20. That's approximately 3.84% of the position. And that's the important part. We know the risk before we enter. If the trade doesn't work, we don't move the stop. We take the controlled loss and preserve our capital. Now let's talk about the upside. Our first target is $2.65. That's mainly a confirmation level. At $2.65, 192 shares would produce approximately plus $9.60. Next is $2.70. That would produce approximately plus $19.20. That's a one-to-one reward to risk relationship. Then we have $2.75. That gives us approximately plus $28.80. Then we get to the major swing high, $2.84. That would produce plus $46.08. At $2.85, we're looking at plus $48.00. But if $2.85 breaks with strong volume, that could be the trigger. If A and Y reaches $3.00, the position would be approximately plus $76.80. That's a 4-to-1 reward to risk relationship relative to our $19.20 planned risk. There are actually two setups I would watch. Setup A, support bounce. If A&E pulls back toward $2.55 to $2.60 and buyers defend that zone, we could see the stock move back toward $2.65. We want confirmation first. The second setup is setup B, breakout. Any pushes through $2.65 with increasing volume, then it holds above approximately $2.65 to $2.70. From there, we're watching $2.75, $2.84, $2.85, and eventually $3.00. Now, let's talk about the downside. Risk management is more important than being right. Our entry is $2.60. If AIM drops to $2.55, we're down $9.60, still within our plan. If it reaches $2.50, we're down $19.20. At that point, we exit. We don't average down. We don't widen the stop. We don't say it has to come back. That's how small losses turn large. Our philosophy, small controlled loss, preserve capital, wait for the next setup. And if $2.50 breaks, the next support zone we're watching is approximately $2.40 to $2.43. If that fails, we could potentially see a return toward the broader $2.20 to $2.30 base. Let's bring everything together. NE has a bullish consolidation structure after a significant momentum move. The stock went from $2.20 to $2.85, pulled back to $2.53, and is now building support around the $2.55 to $2.65 range. Our levels: $2.50 risk, $2.53 support, VWAP at $2.57, $2.60 entry, $2.65 breakout, $2.70 first target, $2.75 continuation, $2.85 resistance, and $3.00 extension. For the trade, 192 shares at $2.60, $19.20 max risk. The key message is simple. Don't chase any just because it's moving. We define our risk first. We identify our levels, and then we let the market prove the setup. This is 5,280 Fighting Bulls. Manage your risk, and never be afraid to walk away when the setup isn't there. Until next time, Fighting Bulls stay disciplined and keep hunting those setups. Analyze the setup. Know your levels, manage your risk, stay disciplined. Fighting Bulls, out.